Good day, all. Ira Epstein of Linn & Associates with your metal market wrap-up, and this is for Wednesday, the 16th of June, 2025. Well, let's take a look. If you want, you can at any point pause. You'll be able to read the highlights as to what goes on. This is from the Fed minutes. This is also part and parcel of what I send to my clients, my review of things, what I thought were the highlights of what went on today, and we get back to where we're at. The Fed did say they're beginning to talk about get that? They're going to talk about when to taper if the economy keeps going forward as it is. Therefore, it's again Fed talk. Are they really talking about it, or are they talking about when they're going to talk about it? It's the first thing. But it does open up the door. So that was taken as bearish. That's how you have to look at what is going on. The dot plot moved also. So now, instead of 4 of the members looking at 2022 as getting a rate hike, 7 now are there. Still, no one thinks you're going to get a rate hike this year. So don't let the press push you into that. The Fed's going to move, and you're going to see that they're going to do something in 2021. They're making it ultra clear, all of them, that is not the case. But the market cares about down the road, for the next 24 hours. I know that sounds funny, but there's a yin-yang impact. Why is gold down, silver down, copper down so much in the aftermarket? Well, number one, those markets closed at what time? The settlement price is at 12:30. The close is at 4 o'clock p.m. So this is before the Fed talk. So this has to catch up with it. In other words, the market's last trades of the day were lower, but the settlement was higher because nobody knew what the report did. This is the catch-up impact, and that's where you're at. You'll see that in the chart in a minute here as I get to it. Does it mean the market didn't drop more? Oh, it did drop more. And that's the yin-yang impact. Now, what do I mean by that one? And these are things that happen over and over. When we come out at 1 o'clock with the Fed statement and begin a press conference at 1:30, and I'm giving you Chicago time, Eastern time, it's obviously later than that. What time is it in Asia? They're sleeping. You know, I know you're going to tell me people trade 24 hours a day. Sure they do. Computers do, the people don't. People sleep. Got that? So as they wake up and they see this, they react to it. So you get another reaction in the market. Then as the morning wears on, well, did they really say anything that's that overwhelmingly bearish? By the time the Europeans get their chance, because when we come out, European markets are closed also, it goes around the horn, and then they're saying, well, if they drove it down, or maybe the Asian market said, yeah, it's not so bad, they jump on the boat, and then by the time it comes back to America, you get a whole circle. So as an experienced person out there with 52 years of experience in this, I learned not to stand in front of a train racing down that road that I have to jump off that rail one way or the other. You heard me say it all week, and I'm the happiest guy right now. I didn't care if the market was up sharply or down sharply. My goal is to keep my clients out of harm's way as best as I can. That worked at this point. Now, the gold's pulling back. On the weekly chart, once we got over this 18-week moving average, we never really challenged it again. When you broke here, you came back, you challenged it, and then you went down. I'm looking for a successful challenge of that number in that general zone, and then the market to try to move higher. Why? Because this market's going to be inflation-based, and guess which central bank's going to be the last of all of them to want to raise interest rates? Yes, sir, the United States. That's what we will be. We're not going to lead this parade. We're going to be at the back part. You watch and you'll get an idea of what I'm saying there. So I'm looking for a successful test of it at this point in time. Did gold fall out of bed? Oh, yeah, it did. Did you have to put yourself in harm's way? No. Just remove what this is and this. The market was coming down anyways. You can see that. Broke hard today. There's that settlement. Remember what I tell you? That's the 12:30 time frame. You had already been down here. You haven't even made a new low since the market first reacted to the Fed statement. Keep that in the back of your mind and learn from that. It is so important on the charts. So you have the lower highs, lower lows. The market was fighting its battle, and frankly, it hadn't done a bad job. While you had poked down, it was trying to hold that 200-day average of closes right here. You see it? So it went down to the 100. Okay. I think still that will prove to be an area of support. So no, I don't think gold's going back down to $1,500, as you'll hear people inevitably say. Should you be a bottom picker? I don't know how to be a bottom picker, so I leave that to other people. Trend down. Market back up here will be the next resistance points as it gets back towards the Bollinger Band and the 200-day average. If it can clear the Bollinger Band, 1852, another resistance point then, and you're already oversold in the market. Then we get to the gold-silver ratio, and in the gold-silver ratio, the market is still staying underneath that 18-day moving average of closes. I like that. And I want this market to start leaking here because that would make silver stronger than gold. You can see silver fell back, and I'll put this here too. This is how the trend was. The market recovered itself by 12:30, but you know it had already hit this low of 2669.5, the 100-day average of closes. You haven't gone back to retest it. So when you see these big declines, understand how that works in the marketplace. Very important. If it wants to slice through that, well, maybe you go to 2600. There's nothing bullish on the chart. Is the market going to be able to stay out of the lower Bollinger Band? Don't know. I think it's going to fight to get back in it. In the copper market, again, I'm going to take off right now where you were. This is how the market finished. It fought to stay within the Bollinger Bands, as you can see, but that again was the 12:30 settlement. Well before the settlement, we know the end of the day trades were near those lows, and you reopened close to that. I wouldn't be surprised if the 420 level is the support. It's certainly looking like back here is a number that's going to be very hard to get up to unless the world comes back from this COVID and the cylinders all start fighting. So could we get back to the $5 level? I don't know anymore. You know, when we were here, until this all happened, I thought that there was a chance. I now question it. Do I think the market's going to crash from here? I don't. Not if everybody's cylinders, and I'm talking Europe, the United States, if everything's working the way I think it's going to work as we get closer and closer into that July, August period and more people get vaccinated, I think there'll be more demand. By the way, in the copper market, today, China formally said they are going to start selling copper out of stockpile. There'll be other base metals they do as well. They did not tell us when, nor did they tell us the amounts. They agreed that they told us formally that that is going to happen. So that put the market down, made sense. We thought that they had 70,000 tons ready to sell back into the market. They won't dump them in one day, so we'll see what they do and how they go about it. In the platinum market, same thing. You tried to stay within the bands. You know that the range was outside, so you open lower towards the day's low. And in the palladium market, even though you rallied smartly, while the market was open, no less, you've come back in the market to the 18-day average. This chart turned bullish. So until this low is taken out of 2740, I think the pros are buying now in this market. Looking at the at under 2740, they went out, and the objective probably to 2878 level. That brings us to the dollar index, and the dollar index is not open yet. The trend is up. You see that it fought a battle, got through the upper Bollinger Band to the 100-day average. Will it be able to stay here? Well, a couple of things working against it. It's overbought. Number two, it's fighting that 100-day average, and that's a huge number to fight against. So part of the market's saying, hey, if the U.S. is going to raise interest rates, that's bullish the dollar. What they didn't say is, number one, I don't think those rates, other than the market raising them, is going to go up very much in 2021. 2022, we don't know when, but the dot plot says 3 more people joined in that they want to do that. And last, in the Ethereum, well, if gold's no good, what is this? And this market came back crashing down again, as you could see, and now the 18-day average has proven to be the resistance that we talked about here. So you put this all together, and the game is, what do you do with it? And that's where I come in, I hope for you. I write 2 reports a day. I record videos for my subscribers as well. They're not available, these videos, on YouTube. They're not available anywhere but to my subscribers. They're password protected, user ID protected. Same goes with my newsletters. And in the newsletters, I give you all the knowledge I have, talk about specific commodities, try to give you a game plan to work with. Then in the morning video chart, you see what it is. Now I'm going to start doing my special reports, and they're available for free to my subscribers as well. Why don't you give this a try? All you need to do is go to our website at www.iraepstein.com, sign up for a free, and the word is free trial. We'll be certain to get everything out to you, get you set up, and you take it the rest of the way. In the meantime, I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.